Okay. So YouTube is always just a little bit behind, but I see that it's live. It's weird to see myself in three places. So I'm just gonna. All right, everybody, welcome back. Whether you're joining us via WhatsApp, the WhatsApp chat, or you are on YouTube, or you're here with us on Zoom. Thank you all for coming. I see all the speakers. I'm very excited to have you guys on here. We'll start the panel after the introductory part. Is Priscilla here? Okay, if she's not, I actually want to play a video. So we've had two AI co-hosts for this segment for the conference, and we finally got in the second segment, we got the second AI co-host for us to be able to hear their presentation. So I'm gonna replay the first one because apparently nobody heard it. It's really short, guys, just 2 minutes. That should give everybody time to kind of do whatever they need to do. And then we will move on properly to track three. So I'm going to play that video. And then Priscilla, do you have an energizer for us
Oh, yes.
for track three? Do you have an energizer for us?
Yeah, I think there is this.
There isn't? Okay. Okay, that's fine.
No, I said
So
there is.
there is. Okay, okay.
Yeah,
I
so
was
I'll
I
just
was
share it
kind of
shortly.
sad because those were fun. So let me just play this video and then you will do the energizers and then I'll Shion hopefully will be with us by then and then he will introduce the track um before we start the panel. Okay, so that's the agenda of what's going on. Okay, I'm saying this and not uploading when I need to upload.
Showing is here.
Shion's here. Okay, awesome. Okay. Yeah, Shion, after this video, Priscilla's gonna give a quick energizer and then you will introduce track three. And again, I'm just playing this as a for us to meet Abdul. This was supposed to be for track one. So let's give it a go and see if this will play properly this time. So share desktop two, share, and just a fun little thing before we get started. Uh-oh. Okay. Well.
Hello, everyone. My name is Abdul, and I am one of the AI co-hosts for Catalyze, and I would like to welcome you to track one. Nearly 600 million Africans still lack access to electricity, while climate change brings more intense droughts, floods, and heat waves. But what seems like a crisis is also one of the greatest opportunities for sustainable development in our generation. Africa holds 60% of the world's best solar resources, yet less than 1% of global solar capacity is installed here. That's not just an energy gap, it's a development paradigm waiting to be reimagined. We're already seeing progress. The number of mini grids in Africa has grown from 500 in 2010 to over 3,000 today, and costs are falling fast, with mini-grid electricity projected to reach just 20 cents per kilowatt hour by 2030. The International Energy Agency says it will take around $25 billion per year to achieve universal electricity access across Africa. That's the same cost as building just one LNG terminal. In other words, it's doable. But this isn't just about access. It's about climate resilience too. African countries can leapfrog directly to distributed low-carbon energy systems that are designed to withstand climate shocks and power local economies. This track explores how African-led innovation, smart finance, and policy reform are coming together to shape the continent's energy future, not as an afterthought, but as a global blueprint for sustainable growth. Thank you.
Okay, now I'm happy. We finally got Abdul to say his piece on energy access and climate resilience. Okay, so quickly, Priscilla, do you have a quick energizer and then Sean will introduce the track?
All right, I'll just share my screen. Yeah.
All
So
right.
I think you have to stop sharing.
Oh, okay.
Okay, so this is a welcome back, basically. Welcome back from the last track. If you were I think Sheol was there. Welcome back, Ikeme. And welcome to the people that just joined. I hope you have a great time in this particular session. Okay, so I have two questions here that I need us to answer. The first is, if you could merge two big African startups into one, which would you pick and what would you call it? So two African startups merge into one. What startups would you pick and what would you call your your super startup that you merged? I think you can unmute if you want to talk. I don't think I can hear anything.
Well, I can just quickly say something. I'm thinking, okay, so I don't any kind of fintech. I feel like a lot of the fintech startups. But like I'm thinking of like a Bamboo Money. I don't know if it's still called Bamboo, but essentially that like merge with any kind of capacity building startup. I don't know. That's what comes to mind. So I don't have any interesting names. I'm just thinking about their functionality. I'm trying to bring money and capacity together. So that's what where my mind is going. Yeah. But anybody else?
In my case, I would do energy, of course. Ignite Power is a very good one that I really like because they are democratizing energy access in Africa. And then I would maybe merge it with a fintech company like
Yeah.
the one you mentioned. So you democratize access and you democratize the way of paying for it too.
For it. Yeah, yeah. Yeah, I think on the last track we talked about a startup that was doing that, both the energy access through solar and then simultaneously providing a way for people to pay for those things. Yeah. So I guess it's already live. These things are live. Okay, so the second question, Priscilla?
Yeah, what African startup would you invest $1 million in today, and what would be your reason?
I can go the Beta Collective. Yeah, obviously. But yeah, that's my go. Yeah, not to take this too seriously.
For me, I'll do Ignite Power, just because of what I said. And I would double down.
For me, I would invest in not necessarily just one startup, but in platforms that are invested in early stage African startups. I think they need the most help getting off the ground. So I would want to spread it across.
Crystal, such a serious answer. We're looking for a little tongue in cheek. Say, I would give myself the money. I would take the money. I was at a products meetup recently and they asked us, so Juliana, you know Wade, but one of our key people in the ecosystem, he was doing his last product meetup and he asked for about 10 people to come and announce their new meetups as a way to keep things going. And somebody came in and said, oh, I want us to build products and really figure out how to make money. And everybody laughed, and Wade was like, "You're Nigerian, right? You know, Nigerians and money is just kind of funny." But yeah, yeah, yeah. So, but great answers. Thank you again, Priscilla. I feel like these energizers have made us chuckle at least through all these very serious conversations. So after that, I would like to open the floor to Sheon to introduce the segment. And I can share a page while you're doing that so that it's not just blank. So thank you and welcome, Sheung. Sheung is our podcast host for Beta Mode Podcast. He does a great job. He's captured a lot of great stories. So very happy to have him here introducing this segment. Over to you, Sheung.
All right, thank you, Ukema, and hi everyone. So my name is Shone. As she's mentioned, I am the host of Beta Mode. It's the podcast arm of Bear Collective, where I focus on telling stories about African innovators, startup founders, and leaders. And I'm here to introduce you to track three. So Africa's startup ecosystem is filled with talent, ambition, and transformative ideas. But there's one critical gap: capital. Today, over 80% of startup funding still comes from outside the continent, and most of it flows through the same limited channels. At the same time, early stage capital is drying up, with fewer investors writing smaller checks, just as Africa needs more bold bets, not fewer. Meanwhile, billions of dollars in diaspora wealth, mission-aligned capital, and African institutional funds remain largely untapped. So the problem isn't lack of capital, it's lack of pathways. This track is about changing that. We're going to explore how to unlock new investment flows across borders, from diaspora angels and first-time LPs to blended finance vehicles, fund of funds, and regional investment syndicates. We'll examine why it's so difficult for new investors to deploy capital into African startups, from currency and regulatory friction to the lack of deal visibility and persistent biases in how investability is defined. And we'll ask a bold question: what would it take to 10x the number of people investing in African innovation? Because building local impact at scale will require more capital, more types of capital, and more people participating in the story. This conversation is about building capital bridges and ensuring that Africa's innovation economy is funded not by a few, but by many. So, welcome to this track, everyone.
Thank you, Sheung. Thank you. And welcome again, everyone. For anyone joining us, this is track 3. You just heard the introduction by Sheung. So I will go ahead and introduce the panel. I'm very excited about this conversation, as I was throughout all the conversations going forward. I'll start off reading the bios. So forgive me if I pronounce any of your names wrongly. Please repeat your name when we come to you correctly. And yes. And then I'll give a very brief introduction on myself. I feel like I've introduced myself 3 times already today, but I'll do that again for anyone just joining us for the first time. Okay, so hi, welcome Juliana. Juliana is the founding partner of Energy Tech Nexus, a general partner at Portfolio Rising America, and a venture partner at Climate Tech Global Ventures, investing in AI in climate. Previously, she was the Chief Development and Investment Officer at Greentown Labs. Investor of the Year for Houston Innovation Award recipient. She is also an Impact Committee member of the Net Zero Ventures, an advisory board member of Ally Energy, the Latinx Startup Alliance, and Impulse for Women. A Kaufman and VC Include Fellow, experience in bridging the gender gap in investing. There's a lot more, guys. So you can see we brought amazing people to this. Juliana was the Texas Medical Center Venture Fund Director and Managing Director of the Houston Angel Network. She was manager of the French Riviera Sophia Business Angel Network and its European Business Innovation Center. She started her career in Singapore, first as international trade consultant for Trade Commission of Spain, and then as a project manager for International Card Center at the Asian Technology Office of Citigroup. Juliana obtained her MBA at the London Business School and Haas School of Business in Berkeley, specializing in entrepreneurship. I feel like I just learned a lot more about you, Juliana, through this bio, but very impressive. Thank you for being here.
Thank you for having me.
Awesome. Ali is the principal and head of Ghana Advisory at Cross Boundary, where he spearheads innovative financing solutions designed to empower African SMEs and unlock growth across key sectors. He has originated, led, and structured transactions exceeding 350 million in agriculture, energy, healthcare, manufacturing, insurance across Africa to catalyze economic growth and job creation. At Cross Boundary, Ali has played a pivotal role in sourcing and co-designing transformative initiatives, including a 117 million agriculture program with the MasterCard Foundation that is set to impact over 400,000 youth in Ghana. His expertise lies in building blended finance structures, mobilizing catalytic capital, and driving scalable programs that bridge the gap between global investors and African enterprises. Before joining Cross Boundary, Ali served at leading Pan-African private equity firms such as Adiwale Partners and Kupanda Capital, where he worked on diverse growth stage investments across the continent. Welcome, Ali. Very, very great to have you here. I'm very happy we have such a broad range of backgrounds in here and the impact you've already made in the ecosystem. So looking forward to a conversation with you.
Thank you, Ukeme.
Awesome, awesome. And then Crystal is an Crystal, I want to pronounce your name, but I'm going to give everybody time to pronounce their first and last names. That's why I'm just sticking to everybody's first name. So Crystal is an international lawyer and development professional. Part of why I was also very excited to bring her here. I think a lot of times these conversations are always like very like financiers and startups, but we want to bring development professionals also. She is the founder of Visa Immigration Pro, a legal services firm that supports startups, entrepreneurs, and businesses seeking to expand and scale. Visa Immigration Pro has developed over 100 hours of legal educational content and toolkits for entrepreneurs seeking to do business in the US. Amazing. She has over 12 years of global experience working as an international development professional, specializing in government affairs, advocacy, public policy, and economic growth initiatives with governments, NGOs, and multilateral institutions and the private sector. She has extensive experience managing multi-million-dollar donor-funded projects, meeting compliance requirements, and delivering measurable outcomes. Awesome. Welcome, Crystal. Thank you for being here. And then
Thank you for having me.
Awesome. Yes. I will do I'm not going to read my whole bio. So my name is Ukeme Essien or Ukeme Daniel. I'm also known as Dr. Ukeme Essien or Dr. Ukeme Daniel or Ukeme Daniel Essien, all versions of it. Usually if you say one, I think I'll know that you're talking to me. So I'm an MD MPH, which essentially that's a medical doctor, a public health practitioner, specifically global health, and a social innovation strategist. My most recent role was in the energy sector, dedicated to improving lives at the intersection of health, climate resilience, and entrepreneurship. I'm the founder of the Beta Collective, which is a collaborative platform that empowers African innovators with the resources, mentorship, and visibility to build and scale impactful solutions. So I have a career that bridges medicine, public health, and innovation. I'm really passionate about addressing complex global challenges, very, very specifically challenges that are affecting African communities. And for me, it's never about like who you are, where you're from. It's really about, at least my passion and what I'm trying to build is how do I bring people all over the world to solve key issues affecting African communities? What does that look like? How do we solve things? What does open innovation look like in that setup? Most recently, I really, over the past couple of years, I've been in the oil and gas sector, and I was able to transition to more the sustainability side of it. How do you do that work, but also have sustainability as a key part of what it is that you're doing? So I'm really happy today to be able to bring a lot of those experiences together, being a generalist that goes across healthcare, sustainability / low carbon solutions, and of course, global health and innovation. So very, very happy to be here with all of you. I'm looking forward to the conversation. So yeah, before we get started, just a chance for everyone. So Juliana, you want to say anything about yourself before we get started? And I'll do that with everyone, just as a starting point.
Sure. So I'm Juliana Garayzar. I'm originally from Spain, but I've been a little bit all over the world, and my connection to Africa came when I was in Europe. I was part of the business angels in the French Riviera. That was an extremely international group, and thanks to that, we created, thanks to being part of EBAN, which is the European Business Angel Network, with Candace Johnson, who was my president at the time. We helped create ABAN, which is the African Business Angel Network, and through that we started connected with African angels and trying to syndicate and syndicate deals with them. So from them I always continue with my passion for Africa, and when I moved to Houston, I continue doing so with collaborations with Ukeme and with other key players that are linking us to the African continent.
Awesome. Thanks, Juliana. Ali, if you have anything to add or start off with?
Yeah, no, thank you again for the introduction, and I'm very excited to be part of this discussion. Ali Jire is my name. I am based, I like to say I'm based between multiple countries in West Africa, but officially in Cote d'Ivoire, but I move quite a bit. But really, honestly, for me, as somebody who is embedded in the African finance space, I engage with businesses on a regular basis and really try to problem solve, really around access to financing, sometimes some creative, sometimes some more direct. And eager for the discussion we're going to have today to talk about how we can really unlock financing opportunity for African businesses as a whole.
Awesome. Thank you, Ali. Crystal?
Yeah, thank you so much. Happy to be here. My name is Crystal Ikani Musa. Not that difficult to say.
Yes, but because we're on camera and I was just like, okay.
No, I understand. No problem. Happy to be here and join this conversation. Like Ukeme mentioned, I'm an international lawyer and international development professional. So I merge the two, and I really focus on looking at startups and entrepreneurs to fill the development gap with sustainable financing, to help with sustainable development, especially within the African context, looking at getting startups structured in a way where they can get global investors. So helping them to structure, put the compliance measures in place. So I look forward to this conversation and sharing more about what I've been doing and learning from my fellow panelists as well.
Awesome. Awesome. Thank you, Crystal. Again, welcome everyone. Let's get started. So this is, for anyone just joining us, this is Capital Pathways, Financing African Innovation. So let's start off just jump right in, talk about look at structural gaps in funding. I'll set the stage. So about 80% of African startups still, funding for African startups still comes from overseas investors, leaving founders vulnerable when global markets tighten. So this is not like a thing we think. We see this today. That's already happened. But the background of things like even just government agencies like USAID and others. So there's been a trend of sort of more nationalistic facing. How can we build local capital pools that kind of are more inward facing, meaning that we are dependent maybe more on African investors, wherever they are in the world. What could that look like in order to complement foreign investment so that when there is a shift, a global shift, political shift, whatever it is not such a shock to the system? Where do we start to build these capital pools? What could that look like? And I'll start off with you, Juliana, because you start off with an angel network. So I'm just curious to see or hear from you what it takes to kind of start those type of capital pools.
Yeah, so I think, I might have created and managed at least 6 different angel networks, a little bit
Wow.
all over the world. I managed the one at the French Riviera, the one in Houston, but then I helped create one in Spain, another one in Chile, another one in Bahrain, and then more than anything, the umbrella organizations of angel networks like EBAN, which is the European Business Angel Network, that helped create ABAN. And then when I moved to the US, the Angel Capital Association, that was the North American one, that we decided to expand and become the ACA for everybody. So globally, and started adding other kinds of global business angel groups like the ones we created in Chile, and even ABAN was part of the ACA. So a couple of things. I think this kind of angel groups are really helpful in activating new capital, new angels into the ecosystem. So both umbrella organizations like ACA and EBAN that I've been more involved in, and I believe ABAN is also great for that. What they do is they give you a sort of toolbox as an angel in a box on how to manage an angel network and how to get it started. And sometimes when you don't have a critical mass in a city to become, an angel network from a typical city, like you have in Houston Angel Network or in Sophia Antipolis in the French Riviera, what you try to do is become a virtual angel. And you become an individual angel of a big umbrella organization, and that's how you start getting to know how to invest in companies. And that's crucial because I believe that many people don't understand that investing is a team sport. To be an early stage investor, you need to do 2 important things. One, that investing is a team sport. So if you want to beat the odds and have good returns, you need to invest alongside experts, and you cannot be an expert at everything. That's why these groups like Angel Capital Association or Portfolio for Women are essential, because you have the critical mass of experts that can help invest in any kind of sector. And the other that is extremely important is that you get activated as an investor by learning the key jargon and how companies judge an investment. And of course, it's not only how you judge an investment, but also you learn a lot about portfolio strategy. If you're going to invest very early stage like angels do, you need to understand how the venture capital model works. And the venture capital model works that you need to invest in a minimum of 10 companies, if not 12 or 15, to be able to get a 3 times the return for your fund. So if you invest only in 5 companies, the likelihood of you getting your money back and with a return is going to diminish quite substantially. So it is it's a numbers game, and that's how it works. And that's why it's very difficult for individual investors who have never invested before to do it. And that's why in general, these very early stage groups not only teach you how to invest as a group, but in general, they have a little fund, what we call a sidecar fund, attached to their network, where you can start maybe with $10,000, in some cases even $5,000, and you would get a diversified portfolio that has been chosen by the experts in the group. And that's the way you should start in early stage investing. Some other groups that are more local, that means that they have been created in a city, sometimes will have the initial founders of these angel groups might have invested in other groups internationally and might bring that expertise, and also more importantly, these groups can also, or these international investors can bring deal flow, because sometimes one of the reasons also why you don't create a local angel group is because there's not enough deal flow in the community. So one of the ways of activating the deal flow sometimes is by bringing international companies or companies from other areas to the city where you're at, or sometimes it could be a local a global startup that wants to get established in Africa, and you can, invest in the local or in the global one. But sometimes getting a group started in a city in Africa, for example, needs to have both the training that can come from a global network or from some locals that have been investing internationally, and the deal flow, that if you don't have enough local deal flow, you should try to import, at least at the beginning, to jumpstart the deal flow situation.
Yeah. Awesome. Thanks, Juliana. So speaking on just a lack sometimes if you're going locally and you're trying to build that sort of domestic investor base. So again, you end up, if you're in a situation where you don't have a lot of local investors, what are some core structural gaps that have led to that? And I'll leave that to you, Ali, if you can speak on that. What have you seen as structural gaps preventing the rise of a strong domestic investor base across Africa?
Yeah, no, thanks for the question. I think there are a couple of things to perhaps flag here. When we look at some of the structure we have in place in our countries, one can understand that the way the system is set up obviously is not going to be successful for us. What do I mean by that? I was at a trade mission yesterday in Ghana, here in Accra here, where the same question was raised. One of the SMEs were saying, we need funding. Unfortunately, we have to go ahead and ask for CFIs eventually come in fund. And then we had a pension fund that was sitting there. They're sitting in Ghana about 6.7 billion runabout, right, of pension fund. But the regulation says that 70% of that should be earmarked for government bonds, right? So you also have another 5% in equity. So 75% of that of the funds is already earmarked, can be useful to do other stuff. Now, to kind of hedge the bet a little bit, they will be earmarking some funds for real estate. Alternative usually don't make up the big chunk of the funds. So I think we need to first understand that we have a problem at an institutional level to mobilize local capital, right? And then once we do that, I think each of our countries should be thinking about how do we promote domestic alternative financing? Because honestly, today, there's a couple of things and I don't think this should be only done at that level, because when you think about the problem, I think of supply demand, but even at the ecosystem level. On the demand side, so on the supply side, definitely we need to do some reforms that make sure that more capital is available, more of our own capital is available to our companies. Our economies are primarily, natural resources, but in very few countries we are seeing, sovereign funds that is backed by some of these natural resources. I am from Burkina Faso, and today we are one of the top producers of gold, but I haven't seen any type of sovereign funds that is, earmarking whatever percentage, could be 1% of the revenues towards, backing local companies. These are some of the things that could be done. We're seeing today a little bit more activity around mobilizing diaspora investments, right? I know Nigeria has been doing some work in that. Senegal, from what I saw, is also doing some work around that. We need more of diaspora funding flowing into the continent, not so much for consumption, but also for investment, because a lot of the funding coming from the diaspora, majority is, we know that they are probably the primary investor on the continent, but most of that is going toward consumption. So we need to think about diaspora bonds that really allow us to create a more liquid domestic capital that could be used to fund our economy. Anyway, let me stop here, but just to flag that there is really some major constraints, and it takes us understanding that we have a problem and some political will if you to kind of be able to address some of these issues.
Yeah, absolutely. Crystal, we talked a bit about this actually. I think initially in our one-on-one, I think it was supposed to be a short meeting. We ended up talking for almost an hour, so I don't know. But I think one of the key things was the gap between sometimes what a lot of these developmental agencies will say, go use this money for, and what is actually the problem on ground. So if a developmental, and again, I'm speaking very broadly, not that you would know what every developmental agency wants to do, but what could their role be in building this like local domestic investor base? What could that look like? What could be a first step for them? Is it just to better understand or just fund whatever initiatives are already happening on ground versus coming up with their own, oh, this is what you must do for this to happen? Yeah, so hopefully
Yeah.
yeah.
Yeah, so building off of what Juliana and Ali mentioned, the ecosystem itself, we really need to have all the pieces working together, like the reforms need to work together, but then also there's a major gap in the local objectives coming together with what like international development partners' objectives are as well. And so when you see that disconnect in what each stakeholder is pushing, you also have an issue on ground with what type of development can actually be made. And so this also ends up causing what I would call like a stalemate, because development isn't moving through private sector, it's not moving through these different type of financing. And then you hear the words that Africa doesn't have bankable projects because they don't have the projects that the international development organizations want. They're not created in a way that they want them to create it. But on ground, every national country in Africa clearly has their own mandates, their own objectives, and what they want to focus on. So what I really like to see happen, which I do preach a lot about, is bridging that gap and being some sort of liaison for that to happen within the ecosystem, because the environment has to be ripe for local investments to happen. And then there also has to be education as well. Just like Ali was saying before, like we need to understand we have a problem. And then just like Juliana was saying, that education, you cannot invest alone. All of that needs to come together and work together in an ecosystem. And so from what I've been seeing, everything is working in different silos. Even if you are an investor and there are not the proper legal structures, protections there, your risk threshold, may be lower than what it needs to be to actually create that development that the nation needs to see. So we need to figure out ways to protect the LPs. We need to figure out ways to protect angels, their investments, and also, what I'm sure Ali would speak to, blended financing, which I love. That's one of the things that I really feel can actually help fuel more local investments. But we can get into that a little bit later.
Awesome. Thanks, Crystal. So we've really been talking on how to build that domestic investor base. What does it take to get initial, even convert some of the diaspora to angels? And I guess I want to take a bit of a step away from that and just say, okay, so some of the things that we have that is contributing to shallow early stage capital, again, is maybe a lack of local investor base, scarcity of angels, we just talked about that, and high perceived risk. So, okay, we'll come to risk in a second. What other key issues do you think is really contributing to that shallow early stage capital?
I can jump in since
Yeah, go ahead.
Yeah, something I would like to see more of are the technical assistance facilities. just more of a reform within that. So we usually see them attached to a specific fund, or we see them attached to like a multilateral, a development bank, something like that. But if we
Sorry, what do you
really,
mean by technical assistance facilities? Can you say a bit more on that?
okay, so basically, funds that when there's a fund, they also have sometimes they create a technical assistance facility that attaches to the fund that either provides technical assistance to the projects either
Okay.
before the investment or
Okay.
during the investment. And so it's basically to help them build their capacity
Okay.
so that they can carry out the investment. And so that's very important. And it's a great mechanism, especially being used for like catalytic capital and blended financing models. But for me, honestly, I think we need to always have solutions for Africa that acknowledges how Africa works. Africa has, if not the most, I know it has the most female entrepreneurs in the world, but it probably has the most entrepreneurs in the world. Understanding that most of them, how they operate, their SMEs or they're very small scale, understanding what type of investments and how to scale those type of businesses, the structure that they need the technical support. And so I think it's very important for us to lean into those type of resources and even reform them in a way so that we can capture more of the type of startups that are actually in Africa. And those that we're missing, even when the diaspora is investing in Africa, they are investing in small scale businesses as well. They're not just consuming fully, but that money is going towards certain small scale businesses. And we need to figure out how we can structure these businesses so that they can scale, get the type of funding that they need and contribute to their nation's economies.
All right. Thanks, Crystal. I'm just gonna move on a bit more to mobilizing diaspora, which we've touched on already. Lee, you said a lot about that. And Juliana, feel free to also jump in. I'm just really gonna set the stage. So we've talked about again a shallow base. We've talked about some other factors, and we've touched on how to essentially what Juliana, you gave us a really in-depth approach to what it takes to maybe get some things off the ground when it comes to building new angel investors. You talked about education. You talked about going virtual, but at the same time, you cannot go alone. That was like for me also just it's something I know, but I feel like I see a lot of siloed initiatives that would benefit to kind of come together. And just to set the stage, I'll give a bit of data for anyone that might not know what we're talking about when we keep talking about diaspora and consumers and how much is spent. So remittances to sub-Saharan Africa hit 54 billion in 2023, yet only a sliver flows into startups. Um, uh, I'm chuckling because I've met I guess what is known as a high net worth individual that is African, and he would obviously be able to be an angel investor, and he believes that startups are not a real thing. You know, he just thinks that people are finessing. People are that startups are finessing. He's like, what do you mean? Go, I'm going to invest in the restaurant down the road. I understand how a restaurant works. You come and tell me you're trying to democratize access to investment bonds, and I don't know what you're saying, you know? So there is also that component. But here, the data is if 1% were to channel that into venture funding, it could finance at least 1,000 new startups at about 500,000 each. So besides the mindset change, you know, so kind of what I just touched on, the mindset change, and we've talked about education, working together. What are some other bold moves that can mobilize? And again, Juliana, please, anything that has worked, part of why you're here is also to bring learnings from other ecosystems. What other bold moves can mobilize the African diaspora at scale to become angel investors or limited partners? And I think Juliana, I'll leave. Okay, go ahead.
Yeah, I would say that, you know, one of the big things that happens when you're trying to establish an angel network in a place where there's never been one and that has little deal flow to get started, is the fact that in general, when you have an established ecosystem, what happens is that the flywheel has turned several times. So the angels that you see in a developed ecosystem for innovation were entrepreneurs themselves. They exited their companies, and when they exited their companies, they're reinvesting in the ecosystem as angels or venture capitalists, and they give back to the ecosystem. And for that, you need to have initial local successes, right? And people who understand how the portfolio strategy works, and also understand how to exit companies, right? Because there are some more incipient ecosystems where you might have already a little bit of a density of angel groups, but in many cases the first exits might not have come yet, and that means that, you know, the flywheel hasn't started. The second thing that happens when you don't have these serial entrepreneurs who, you know, exit their companies and reinvest in the ecosystem is that the people who can become angels are in general corporates or professionals that still have their corporate job, or they are retiring and, you know, they want to just have, you know, fun and learn doing angel investing. And this kind of corporates for their whole life might have done oil and gas, where the risk profile is totally different because, you know, you're doing more like project finance, and you like seeing and touching the things, you know, and seeing and that's why maybe it's a lot easier for them to invest in a restaurant than investing in a fintech startup or in a democratization of energy or whatever you want to call it, right? That has a very different profile than investing in things that have more tangible, you know, assets and have a very different risk profile that is not the portfolio strategy where 1 over 10 or 15 companies end up returning the whole fund, right? So one of the things that has been critical for me, mainly in Houston, where there's not that many entrepreneurs that have exited companies, but you have a lot of corporates who have earned a lot of money in their corporate careers, and now they are eager to start investing, is demystifying the risk profile and making them understand that the risk profile of investing in startups doesn't have anything to do with, you know, the kind of investing that they've done in the corporate world. And for that, because this is a very risky, high reward asset class, they also need to understand that only in general, they need to invest 10% of their investable assets in this kind of asset class. So this is not, you know, an asset class that can be, you know, compared to investing in stock exchange where there's a lot more liquidity and things like that. So I think the demystification, but also I would say for more diverse investors and women investors, there's this fear of being judged on how good of investor you are. So there's a lot of women and underrepresented investors all over the world that would donate very happily a couple of million, no questions asked. But if you ask them about investing it in a company, and that means, you know, instead of giving the fish, you know, giving the teaching them how to fish and you know, making sure that money multiplies, they don't feel that comfortable with that. And I think it's because they feel like they're going to be judged as investors, and they would rather not get there. So I think for these cases, financial literacy is key. For them to understand that first, as I mentioned, investing is a team sport. There's no way you can know about everything. But also, I think it's very important from the beginning, and that's why I have invested also in a lot of financial literacy startups, is teaching young people from very early age, and also teaching women from very early age about the opportunity cost of not investing and the compounded effect of money. Because if we were teaching the diaspora money holders about the opportunity cost of not investing versus, buying things, that's when it becomes very interesting. And we have invested in a few companies that do that really well through like very short TikTok videos, like very bite-sized videos to teach the younger generations on like how different it is to eat a McDonald's instead of investing in McDonald's, and all of these differences, and how, if you invest in a McDonald's or you invest in a GE or in any kind of tech company, how the compounded interest of money affects, and how, you don't have that when you just do consume and buy leisure, and for the Latin community and the Black and brown communities, they are buying a lot of how do you say, media consumption, movies. They buy a lot of brands, and all kinds of consumer brands. What would it be instead of just buying? You would invest in these companies, and the return that investing in those companies would give you, and that is fascinating. So I think some financial literacy would help tremendously for jumpstarting the ecosystems in Africa.
Awesome. Thank you. Ali, anything to add to that? Oh, go ahead.
Yeah, I think Juliana touched on a few things that I wanted to flag. Diaspora certainly does. I mean, I don't want to be, generalist regarding some of my comments here, but certainly they will not understand some of the sophisticated terms, right, around like, startups and VC and all that. But you know what they understand? They understand profit. They understand money, right? Right. Even back to my earlier point, talking about how to put in place like reforms. We also haven't had a lot of local VCs or local PE that have performed, right, to the point where it makes sense for anybody to actually put their money in, right? Today, obviously, your local GPs will be, you have like a GP country, but the LPs will be, GFIs, majority will be GFI. In some countries, you'll see, high net worth individual, but the majority of investment of LPs in our funds are, GFIs. And today, when you look at the private equity and even VC ecosystem in Africa, everybody's complaining that they're not being performing. Now there's more a tendency to go towards private credit, because Africans generally said, SMEs understand credit versus like equity, right? So we need to have some success stories for folks to show that, hey, investing in startups, investing in businesses in Africa is profitable. Then take those stories, go ahead and market it to people who have the capital. Because at the end of the day, yes, the diaspora has the money. I was speaking to a contact earlier today who told me that, a couple of years ago, he set up a small fund, was able to mobilize 200,000 from some friend. They invested, in across, Africa. They lost all the money. We decided, okay, let's think about it now. Let's decide to decide not to go into advisory instead of investments. So showing those stories will be able to empower the diaspora to reach their own money. But I think we also need to talk to people in language that they understand, right? So I'm not going to go to people who are certainly, your uncle. I'm guessing I'm calling your uncle, your network individual person that I'm saying invest in startups. No, they probably like, what the hell are we talking about, right? But if you say, hey, listen, I want to raise money to invest in businesses to survive, they can understand that, right? So it's also, how do we market to folks who have the resources, but in terms that they can understand? Back to your point, Juliana, educate them in a way that they can understand. First of all, in terms that they understand, and also in data point that they can understand, right? People are used to you invest, I'll give you interest rates. Now you're coming with like a 10x multiple, it can be a bit sophisticated for some people. So I think, yeah, just wanted to add that a bit, but I also want to talk about blended financing into this. So we earlier in the year before USAID folded, we're working actually on a scheme to mobilize funding from the diaspora in Mali, right? And part of that is really showing them things that they can understand, showing them the potential and the opportunity cost of not investing, and understanding that people are going, assuming that people who are migrating going to kind of get a better picture, and they want to be actors of development, right, in their country. So pitching in terms that can resonate with them could be one of the way to unlock capital through those
Yes, thank you. Thank you, Ellie and Juliana. Great, great conversation. So again, we've been talking so much about unlocking new investors, but doing that locally. I want to now take us to doing the same, but doing that on a global scale, like foreign investors. This is something I'm extremely familiar with. I feel like this is something I do every week. If I go to we have something here called the Ion, which is literally like a kind of startup district area. So they have a lot of events. I feel like even just going to an event there, I'll probably find somebody that's an investor. I'm like, oh, do you do any investment in Africa? And they look at me like, what? Well, to be fair, that's changing because I know when I started having these conversations like 2 years ago, people would just look at me like Africa, but now I say that. In fact, people are now chasing me like, Africa? Come tell me more. We're trying to get into Africa. So the conversation is definitely changing. And we can see that for example, accelerators like Y Combinator at this point have backed over 160 African startups. So if people are looking for trend signals, I mean, I obviously in my conversation, my messaging, I drop a lot of these things because you want to use messaging, you want to use institutions that people understand depending on the market and who you're talking to. So again, the conversation is going from sort of unlocking local investors or people that are tied, whether they're abroad but have family, unlocking those investors to sort of going to educating maybe or talking to people that might not know a lot about Africa, but don't, they're not against it. Like what would it take to sort of bring them on board? What has worked? I guess the better question or the more laid out question is how can African ecosystems better onboard international early stage investors unfamiliar with local markets? So essentially what I'm saying, but in a cleaner way. And now anyone want to take that?
I can take that.
Okay.
That's exactly what I do at Visa Immigration Pro. So
Okay.
One of the things that I focus on at Visa Immigration Pro is education. Like we've all been saying, education is very important. So I'm taking it from the angle of educating the local startups to understand the international investors' mindset, what they're looking for when they're investing, what their risk thresholds are, the compliance, everything they need for like their data room before they invest. Because to be honest, in markets like the US, there's a standard way of approaching a new investment that has been developed. The legal regulations are also there in place. And so working with like African startups, what I do is help them structure their businesses so that they can get that international VC funding or different types of international investments. And this involves me sitting down with them, helping them create that structure. Like we all know, a lot of times US wants Delaware C Corporation, just understanding what it takes and what it looks like. Now, a lot of times a lot of African startups, they don't understand what those unicorns had to do to become unicorns. For example, going to Y Combinator, it's not an official requirement that you will be a Delaware C corporation, but before they invest in you, guess what? That's one of the first things you have to do is set that structure up to receive those type of investments. And so I also help them set up their structure so that they understand how their African entity can still remain a part of the business, a part of the structure, and they remain true to their African identity, because that's important for me as well. I've developed an e-course on this specifically just so that African founders and non-US founders can understand how they need to structure so that they can get these type of international investors as well. So I would definitely say structure is what I say is the biggest thing for African startups to really get right, so that they can be able to get to that table and get those type of deals made.
All right. Thanks, Crystal. Ali, what has worked? Like, obviously, you've worked with, I mean, in your bio, we saw how you worked with the MasterCard Foundation. What has worked to onboard these? Again, I guess we're more focused on early stage investors. What did it take? What are the components? Crystal just talked about structuring in a way that they feel more comfortable investing in you because they understand the structure you have. And in some cases, you register your company locally, so they feel like their money is in America versus somewhere else. So yes, that's one component. But Ali, what have you seen that has been great in onboarding early stage investors that are unfamiliar with local markets? I'm also very interested in this.
Yeah, absolutely. So let me speak quickly about the work we do with the MasterCard Foundation, and then I can address maybe your points. So, talking about local capital market being dry, the MasterCard Foundation, their mandate is really to create job opportunity for the youth. So they wanted to do that by mobilizing commercial capital, but here we're working with local banks to lend to the agriculture sector, because agri sector has the potential to create jobs for young people. So for context, the interest rate in Ghana today, we're talking about, at the time we're designing this program, I think was roughly about 25 to 30%. I know, so they made funds available to a number of banks. They made about 87 million available to the consortium. And now banks are able to lend at 7% and can provide loans up to 1 million USD equivalent of that in city. So very successful blended mechanism that we put in place, and we are effectively working with banks to do that. Now, when it comes to the work that we're doing with companies, sometimes people get so hyped up by the fact that I'm gonna raise, and when I raise, that's exciting. It is actually it's a commitment, right? Once you raise
your
funds,
money.
so if you're not, I think Crystal was talking about structure, right? Structure to receive the investment, definitely, but structure to position yourself for what you're getting yourself into. If you don't have a good governance structure in place, you are in for a mess, because investor, they're gonna require reporting, and you need to be in place to be able to report on that. So some work that we're doing with I think we're doing work on both sides. The companies getting the funding, the startups, but also on the investors also, that was gonna be funding them. On the company side, definitely making sure that they have a solid operational plan. So it's funny that people will think that as an advisor, when you come in to support the company, raise money, you just build the pitch deck, financial model, and then that's it. No, we realize that in some cases, we have to be the emotional support. We have with supporting people raise funds, they come and cry to you, and you have to be there to comfort them, because that's what the job requires, right? So obviously, the business need to be, have all the fundamental, right, structure around operations, structure around processes, making sure that everything checks out. And governance, definitely, that's a major point. Whether it's a small or a large check that you're raising, investors are going to be requesting for a reporting. You need to be better positioned to report. So we do that. Now, on the investor side, I think, especially those that are not really familiar with the local context, it's always good to have a co-investor, right? A co-investor that can, show them, yes, here people, not everybody has a bank account. People use, mobile money. And this is what it means for them to understand, okay, maybe when I'm in California, I'm never gonna use Momo, but like from a West Africa setting or East Africa setting, that's how people transact. So anyway, so being able to kind of demystify those local contexts to them in a way that they can relate to kind of lower those barriers. Those could be those are some of the things that we do to make sure that we equip them as well.
All right. Thanks, Ali. So speaking of like onboarding foreign investments, doing that, like, having those conversations, I think one of the major barriers, whether it's said or unsaid, is the risk narrative. And this is just a very candid question to you. I mean, do you think that the risk narrative for investing in Africa is overblown? And I'm gonna go around just to get your thoughts on it, or your opinion if you have any on the subject. I'll start with you, Crystal.
I don't think so, to be honest, because when you're looking at the legal structures that are in place, they don't compare, honestly. So within my firm, I also help individuals invest in the US, like from Africa. Some of them have done it through like the EB-5 visa, different ways. And when I compare how those investments are structured to what I see in Africa, the risk is there. The risk is high, and it's just because the regulations are not there. We need to verbalize it. We need to write it down. We need to make it a policy because investors understand what risk is, but risk still has to operate within, I would say, a structure, and then that also guarantees you that you understand the risk. Coming from outside markets to Africa, especially not understanding the type of risk, it's very volatile, like you won't understand it. And we're seeing that across different markets right now too, with tariffs all of a sudden and how the governments are shifting, and this is affecting people's investments. So structure, I'm a structure freak, clearly, but understanding these legal structures, having them there will definitely help risk. I don't think it's overblown. I really do feel it's risky because the structure is
Startups are
lacking.
risky. Okay, so yeah, okay, all right.
Yeah,
Juliana.
but within a structure, right? Like,
Yeah.
I mean, for sure, yeah, definitely. But we've had success stories. But again, we'll get into why maybe that's part of the issue. Our success stories are not well told or shown, which Ali you mentioned already. But Juliana, go ahead.
Yeah, so I would say risk is not only risk. You have different kinds of risk, right? You
Yeah.
have country risk, you have taxation risk, you have currency exchange risk, you have political risk, and some of them can be hedged. Some of them can't. I can see in the US, in general, people are very okay with investing in African startups, provided there is a structure, as we mentioned, in the US. So at least they want to get rid in general of taxation risk. You know, they want to make sure that whatever they're investing is taxable in the US so that they don't have to go and figure out any other tax regime in any other country. So many have been okay with that. But then, of course, you have the political risk. You still have the exchange rate risk and many other risks. And, you know, the only way to bear the risk in general, if you still want to be able to investing in a different countries, making sure that you diversify your portfolio, right? So that you have a way to hedge that risk with other pieces of your portfolio that make it more palatable. And that's also an education that we need to do in terms of our investors. There's different ways of minimizing risk and hedging that risk, even if it's exchange rate risk, and you know, ways of mitigating it that are clear. And the last thing I would say, because I need to drop off early because I need to pick up my son and I'm already late, is also the fact that a lot of people invest in innovation, but they don't innovate in finance. And I think in other countries where maybe venture capital, angel investing is not that prevalent, we need to find other ways to invest. That could be either blended capital, like was mentioned here, revenue-based funding, because, you know, not all of the startups need to become unicorn and become the next, Twitter or whatever it is. There's a lot of good size, companies that, microcredit started in Africa and is really big. So I think there's other ways to finance through debt, through grants, through impact capital, to finance the innovation that don't have to be like, investing in VC or angel. Because as Ali mentioned, getting an investor is just the beginning. There's a lot of strings attached. It's like when you get married, right? That's the first stage, but then you need to live sometimes with an investor longer than a marriage, right? And I think those things, some people think that getting angel money or VC money is a kind of a milestone in itself, which it is, but it's it's not that big.
Yeah. Well, thank you, Juliana. Please, yes, leave if you have to. Thank you so much
Thank
for
you.
having. Yes, we're almost done with this. Thank you. So Ali, I'll let you have your take on it. Is the risk narrative for investing in Africa overblown?
So is Africa risky? Yes, absolutely. Like any market for that
Oh, yeah.
matter.
Any market, yeah.
Is the risk overblown? To some extent, yes, right? So I think you have to frame the context here. We are operating in a continent where we have, 50 countries and, different currencies, different regulatory framework and all that. To me, yes, there are risks, but you have to think about the rewards, right, when investing in those markets, especially into markets where everything is, for grab. Political risks, to me, yes, we have some guarantee that could be used to kind of mitigate for that. Currency risk, some could be, you can price that. When it comes specifically for risk that I think is a bit hard to manage, to me is more about on the operational side, right? And sometimes, even on the integrity side. But all the other parameters, I think you could kind of, put some guardrail and protect yourself and bake that in your pricing, right? To me, I think investors should be able to quantify the magnitude of the risk and price that in the interest rate if it's an interest-bearing facility, or price that in the valuation if it's an equity transaction. So yes, I think we should not stop at the fact that it's just risky and not go all the way. The other thing that is, I think that's just like one side of the equation, and it is missing on the opportunity by just stopping at yes, it's fairly risky. Yes, market by market, things look different, and even I think Juliana was talking about diversifying. We supported companies to raise funds, and while they're raising funds in their markets, things started going sour. One of the ways you protect yourself is expanding into another market, right? If you're investing in Nigeria and Ghana over the past 5 years, chances are you are in trouble, right? If you invested in USD. But we've seen a lot of those companies, move to the Francophone market when you have the currency that is pegged to euro. And, and then on the average, you're able to balance your portfolio and improve your return. So yeah, those are some of the things I just wanted to mention.
All right, thank you. Didn't want things to get too spicy there, but this is a very last question, and I'll keep it just very simple. It's like I guess a closing point. We've talked about showcasing success stories. I think that has to be part of what will happen in bringing more, even just local investors, right? People say, oh, I don't understand startups. Even if you use the right messaging, they would rather work with something that is a lot more tangible than that. But anyway, I would say maybe if there were more success stories, like you mentioned, Ali, then that might also help move the needle. So my final question, as a way to close this out, I'll start with you, Crystal. What is one way we could better showcase our success stories, in your opinion? Like, do you have any ideas on that? Just one major way we could do that.
One major way, I would say now I think it's more so about us showing our own success and telling our own story from our own platforms. I think we should start from within, the same way we're looking for domestic, financing from within these countries. I think we should take ownership of that within the continent. I look to entities like the African Union who has that wide reach, who can actually amplify these stories and use their platforms to amplify it. There are so many other regional platforms that I feel we should really focus on and push these stories to, and also have them push these stories out further, because they can reach the world. And so, for example, like the African Union, who recently joined has a seat with the G20, this would be an awesome opportunity for them to take some of these stories to some of these meetings that they attend. So I think it should start from within. We need to start pushing these stories out and taking it serious. Yeah.
All right. Thank you, Crystal. Ali, what is one major way, in your opinion, of what we can do to showcase our stories?
Yes, I think we need to communicate more on models that are working, right? I was talking about the partnership with the Mastercard Foundation, and we today are in posture where we realize that historically some of these DFIs would just provide guarantee to a bank, like, hey, here's a guarantee, go ahead and lend. We realize that some of that's not working, right? That's not creative blending finance. It's not sustainable blending finance. And we develop a model that is, it's working. And today we are communicating more and more that story. And we have some DFI coming to us, want to learn about what we're doing that's working. And then I think they can borrow some element of mechanism that we put in place. So that's that. The second piece is, we need to, within the African context, define what success is for us. What might be success in Silicon Valley? Somebody exiting at 20x might not be success in my African context.
Yeah.
In my African context, I want to be able to build a business that allow me to employ 20 people. That's success story, right? And I don't think we need to align on what people might define success. So we need to first, agree within our context what success story is. If I have a business that is owned by, somebody who just graduated from university that is employing, I don't know, 10, 20 people, and we think that's success, let's provide him the platform to show other people how we did it, right? And let's continue to build on those stories, continue to build local champion, continue to build, those young leaders, because that's how we create the domino effect. That's how we create that flywheel effect. And unfortunately, sometimes we borrow from other people that, and it's not really adapted to our local context. To me, I want us defining our African successes and then communicating massively through, different platforms, obviously. Yes.
Yeah. Thank you. Thank you so much, Ellie and Crystal. Like I like that sort of ending point of how do we tell our stories. So glad to have you on here. Also grateful to Juliana. She just had to leave a few minutes ago. I think these are conversations that, again, this is just a point in time. I'm hoping anybody in the audience that finds can see this as a starting point for maybe how to galvanize your own communities. So thank you again. And this brings us essentially to the end of track 3. We did it. Oh, Lord. So doing this since 10 a.m. I want to say a big congratulations to the Beta Collective team and everybody that has helped us put this together. We have done this in the past, and this, thank you, Crystal. This has actually, the last time we did this was in person and in a large auditorium. So this was definitely very different doing this online. Part of what we were trying to do was obviously to be able to bring speakers like you guys to the room versus just who's local. So that was definitely very, very, got a lot of insights from that. For anyone still here, grab the QR code. The very last part of Catalyze Conference is tonight. So in a couple of hours, I will find myself on the other part of town, and we will be finishing tonight with networking, music, people, and food. Yeah. So just as we've done in our past conference. So thank you all. And of course, if you would like to continue the conversation, we have a WhatsApp group, and I look forward to talking more. Ali, we definitely have to connect. We went so many years, so we
Yeah, I
have to have
know.
a side conversation. Yes, where we can catch up properly. And yes, and Crystal, of course, also continue the conversation as we have done very recently. Thank you all, and goodbye to everyone. I'll
Thank
leave this
you.
up for a
Thank you
moment.
so
Thank you.
much.
Thank you,
Thank
guys.
you.
Thank you, Kevin. Thank you.
Bye.
Bye.
Thank you all. I see the emojis. Thank you. Okay. So again, if you missed it, you can scan. I think this is still showing. You can scan this if you are local in Houston. I look forward to seeing you in a couple of hours. Some of the speakers you saw this morning will be there. Also you can talk more with them, connect with them, and hopefully we can bring people together and people can get something great out of Catalyze. Thank you all so much for staying with us this long. Have a wonderful, wonderful rest of your day or night, wherever you are. Bye, everybody.